Thanks for the very thoughtful reply. It's an argument I've heard before, and I understand it, but I don't agree with it. And let me point out some reasons why. First of all, gold is a commodity, like anything else, and like any commodity in a free market, you have to expect that the price is going to fluctuate due to supply and demand. Now, the thing with gold is because there is a lot of faith that gold is going to retain its value, there's a lot of demand for it, and there's a finite supply, right? People hoard gold and drive the price up, okay? That is a phenomenon peculiar to gold, right? Other resources, perhaps people are not so eager to hoard them because they've got limited shelf life and a number of other things. But people hoard gold; they drive up the price. That's all market driven. Okay, that has nothing to do with anything about gold's intrinsic value. Its value as a resource is, well, how much does it save you over the long run when you use it on like electronic connectors, or when you use it for jewelry, or when you use it for something useful, when you use it on a product as a resource and you combine it with labor, how much labor does it save? Well, its price due to hoarding and supply and demand is much higher than its value, its labor value, how much labor it saves, okay? And that's because of the hoarding going on, all right? So gold is a peculiar example. But you have to expect that prices are going to fluctuate due to the free market, right? Now, in terms of what is desirable in terms of inflation or deflation, I would argue that people sitting on currency is a bad thing, because if they sit on currency, they're taking it out of circulation and not doing anything productive with it, all right? Now, gold is a good example where if you've got a commodity-based currency like gold, people sit on gold, and the very fact that people are sitting on it causes a shortage, causes the value to go up, and causes deflation, which is very bad. It's a very negative thing when deflation occurs, because then people start hoarding the currency and not spending at all. The economy just comes to a complete and utter standstill, and people just wait out to see how far to the bottom it will go, to rock bottom, and wait till the economy just hits rock bottom before they start spending again, thinking that the value of their currency is just going to keep going up and up and up, all right? It's bad. Deflation is to be avoided almost at any cost. The cost of avoiding deflation, of course, is some modest amount of inflation. Now, some inflation is systemic because we print money, of course. Some very modest amount of inflation. A lot of inflation, the bulk of it, is because the cost of goods changes, the price of goods change, because the quality of the products and services we buy has increased. All right, if you look at food and produce, the quality of food, except for McDonald's, obviously, but the quality of food is increasing. We're getting fresher and fresher produce. When you look at housing, the quality of our housing is improving. We're getting sturdier houses. We're getting better quality of materials. The quality of everything is increasing. The quality of our life is increasing. So it's only natural that the cost of living increases as well. All right, that some inflation is because we're buying better and better goods. All right, so inflation isn't a bad thing. Inflation, modest inflation, is preferable to deflation, okay? And modest inflation is actually more realistic expectation of any economy, that a very modest rate of inflation, as long as you can find investments that can beat inflation, you're set, okay? You want people to be able to invest and profit from investments, and not have inflation be so large that it drags down investment, that there's capital flight, okay? A very modest degree of inflation is healthy for the economy, all right? And by modest, I'm talking a couple of percentage points, okay? If it's much more than that, then that becomes a problem. But a couple of percentage points is not all that bad. It's actually healthy for the economy. It provides incentive for people to invest and do more productive things with their money. Getting back to Keynesian economics, if, as you suggest, the businesses had savings that they could invest in long-term investments, there would be no need for Keynesian economics, okay? The idea that the government suppresses businesses from making long-term investments is just completely backwards, all right? The problem with the downturn in the economy is that businesses do not have a lot of savings. In fact, they're running on cash flow, or they're even running on debt, okay? And that if they had savings, then they could weather the economy. They could weather the downturn and keep all their employees employed during the downturn and have them do longer-term investment type things while the economy is recovering. But that's not what happens. What happens is they are living through a cash flow, literally hand-to-mouth, and that with a downturn in the economy, the cash flow shrinks, and they've got to shrink their workforce to match the economy. And that's what we see happening. That's why there's unemployment, okay? There would be no unemployment if businesses had savings they could convert into long-term investment during economic downturns, all right? And the government doesn't intervene until it becomes obvious that unemployment is rising, that we're going into a tailspin, all right? That all these mechanisms have already taken place, that we already know that there is a shortage of savings for making long-term investments, okay? So you put the cart before the horse here. Because there aren't savings either. People don't have savings. Businesses don't have savings. There's a shortage of savings. The government has to step in and start spending, all right? Because people can't make long-term investments. What should the government do when it starts spending? Well, it should start making long-term investments. And we're seeing a lot of that. We're seeing investment in high-speed rail, investment in alternative energy, investment in future technology. That's where we should be spending the stimulus, or most of it, a big chunk of it. We should be making public investments, long-term investments in future technology and infrastructure. Okay, and it's precisely because businesses are not doing that the government has to. Okay, so that's all I'm going to say for now. Thanks for watching. Bye. Talk to you later.